Josh, the other thing about that
$5 trillion
period
in money market
2011,
funds earning. $5 trillion in money market funds earning negative real returns after inflation.
Exactly.
$5 trillion. Prior to the pandemic, it was $4 trillion. So the growth in money market assets is up 20%, and stock market forward PE has actually declined this year because earnings growth has been faster than the growth in the market.
$1 trillion incremental in cash, 20 trillion incremental from the lows in equity market value. What would you tell your clients if they had to rebalance right now, if they were up that much in stocks and their cash holdings went that much lower as a percentage?
Yeah, I think it depends if you're doing a rebalance on a calendar basis or you're trying to be opportunistic. We try to be a little bit opportunistic, and this is probably as good a time as any in a sleepy market where there doesn't seem to be a tremendous amount of news in front of us. Earnings are behind us. It's not a terrible time to do a rebalance. But then what? And how severe of a rebalance do you really want to do here?
the other thing I was going to bring up, Josh, is the reason that in 2011 why we became a little number to all that bad news coming out of Europe is Mario Draghi said, I'll do whatever it takes to save the euro. And that actually argues for why Jackson Hole is important. And that's because the central bankers came in and they just numbed everything with trillions of dollars and commitments and pledges to do anything to keep the economies afloat, to keep the currency together, whatever it takes. And there are parallels to this situation, I would say, because Jay Powell went all in at the beginning of COVID and gave a strong signal that he's going to be there from the beginning until the end. And now we're talking about what the end is going to look like. And so it actually, I think, really does matter what happens to Jackson Hole for the entire market direction, doesn't it?
Well, I think you will absolutely get volatility if there's an unexpected comment made. But what are we really talking about? Like a down 500-point day in the Dow? If you think about who's in control of this market now, the people who are living off the money that they have invested in stocks are gradually exiting, and a new generation that loves volatility and is actually enjoying themselves when they get opportunities to buy stocks lower, they're the ones coming into this market. So that bout of volatility, if Jay Powell sneezes in the wrong direction, or Kaplan gets out of line, needs to be straightened out, or whatever, that's going to be very short-lived. And so that's why I feel...
Whenever they do it, whether it's Jackson Hole or whenever they start tapering and then talking interest rates, that's going to be a major factor. That's all.
Sarah,
not necessarily
existing home sales this month, we just got that data today, up 18% year over year. Last month it was like 25%. We need that to slow down. It's not doing anyone a favor. It's not helping the economy. There's no reason they wouldn't taper, and there's no reason for a long-term investor to think a taper is an emergency. So I think it's important that we cover Jackson Hole. I think it's important that we listen to what gets said. But can you find me somebody who sold on a Jackson Hole speech and is happy about it today? Like, I don't think that person on earth exists. So investors need to be temperate around these types of events and take a deep breath before reacting to them. And I think that's something all of us can agree on.
That's fair.